Welcome to the show. Jason Bible, Robert Ruffino, Texas Real Estate Mastermind.
So we're turning a corner.
If you read everything on social media, there's a crash imminent.
Oh my God, it's all horrible.
I've heard it for 10 years now. It's coming any minute now.
However, if you read the actual federal data, we're turning a bit of a corner.
There's no crash. It's well, there is a crash. I wouldn't say a crash, a softening in the exotic car market. So for those of you who bought, I am following all the Porsche guys right now.
Oh, and they paid that premium?
They paid a premium through the nose. Yeah. And Porsche has always said too, even with their specialty models, they're like, we build cars to drive. This is not an IRA for you. So Porsche really does not like it when people take their cars and put them in a museum or put them in their collection and never drive them. It drives them nuts. So they always say it. You'll hear them say from time to time, hey, this isn't an IRA for you. Gotcha. Like, go out and drive this thing. That's why we built them. So in any case, that market's softening. A couple of the exotic car markets softening. And Doug DeMuro had a video came out last week, and a Porsche guy I followed had one out the week before. And this is what I said. There's two types of inflation. There's demand side and supply side. Why did Porsche prices shoot through the roof? It was a supply issue. Yep. The chip shortage, COVID, all that stuff. So you used to be able to walk onto a parking lot and buy one of their GT series cars.
Right. So they probably had lower demand, just a lot less supply, though.
Yeah. Well, what was interesting, too, is during COVID and all that, they were selling more cars than they ever had in their entire existence. So, but anyways, to go back to kind of the point here, at the end of the day, it was supply side inflation. So all this stuff where folks are going to take credit for stuff, I'm like, that's not what worked. We're watching economics at play here. Finally, the supply chain is speeding up again. It's getting back to normal. It will take, I said this when the whole thing started, it will take 2 to 3 years for life to get back to normal. That's at the end of this thing, which officially ended in what, 21?
Mm-hmm.
Tail end of 21. When did California really open up?
Oh, not until 22.
Okay, so let's call it Q1 22. It won't be till 2025 till things get back to normal.
Well, the Walmart CEO said that high inflation is gone.
Yeah,
and he expects rapid price reduction in very specific categories.
Interesting.
So clearly he's seeing the chain and, okay, hey, we know this is going to go down, this is going to go down, this is going to go down. Still issues on the electronic world, right? Chips and things like that, because there's such a demand for it. But Walmart CEO said, hey, inflation is under control, essentially. And that was really good, hovering around 3.2.
Yeah.
And I think first quarter this year we got down to 3, or second quarter this year we got down to 3. So we're heading in the right direction. We were talking about today the Fed rate is, what is today's Fed rate?
Let me look. 10-year.
5.5.
What's the 10-year Treasury? No. $4.4.
So 4.4, but what's today's prime?
The actual prime rate?
Yeah.
Like, you want the Wall Street Journal prime rate?
Sure.
Oh, 8.5.
Right.
So we've got a delta there between the 10-year Treasury at 4.4 and the Wall Street Journal prime at 8.5. It should only be 150 to 200 bips apart.
Right.
It's way too high.
Right. So what we're seeing is there's still that FUD, the fear, the unknown, right? The doubt in the American marketplace. And the guys that lend the money are, hey, this is the premium. The premium is now 400 bips, right? 4% on top of, they're getting it at 4.5%. Now, we're always told that the mortgage rates don't tie directly to the Fed rate, but they kind of do.
Yeah.
Right? It's just the marketplace. But for sure, what ties to that prime rate is hard money lending.
Oh, absolutely.
Right? That is the line of credit.
Yeah, and so the way it works is usually they're 2% above the Wall Street Journal prime rate. Right. So they're at 10.
Yeah, they're 100% more than prime rate. Yep.
So here's what's interesting. There was a lot of hard money lenders that were getting their money at 3-4%, 5% for years. And now all of a sudden it's jumped up to 10, and everyone's having to tighten that belt a little bit, right? Yep. Where they were getting 3 points plus 5 points on the spread. I mean, you got to think that's some pretty juicy returns.
That is great returns. Yeah.
Yeah.
over 100%, right?
Well, you've got, let's say, $100 million on the street. So you're bringing in what, $5 million just in the spread.
Yes.
Remember, five bips, it's 5%, right? 5% of 100 million is 5 million.
Yeah.
So if you don't do anything else other than just cut the spread, you're at 5 million right there. 3 points is another 3. You're at $8 million on $100 million lent once. You wash that money. I like to call it washing. We shouldn't call it washing, but that's kind of what it is. You turn the money.
Yeah.
Turn the money twice.
1.5 times a year.
Yeah. Well, if you just turn it twice, you do it twice.
Right.
You're at
10 million.
You're at you're at 11 million.
Yeah.
Well, you're going to have the same spread. You're going to get the 5-point spread,
10%.
but then you got 6. So you're going to be at 11%. You're at $11 million on $100 million lent. Not a bad business, huh?
I think we're in the wrong business.
We might be having those conversations soon,
be in
right?
the wrong business.
So, yeah, when you look at it from that standpoint, it's like, well, and I look at it from this way too. I had one of our biggest investors when we were at the old building, and we've been meeting with some of our biggest investors, and she had asked in a kind of off the cuff, but I think she was just frustrated, right? So, but one of the things she said was, well, Jason, what did we learn through this whole thing? And I said, I'll tell you what I learned. If I had to do this COVID thing all over again, I wouldn't have raised any debt. Because I said I could have paid all my investors 9% all day long.
All through COVID, yeah.
All through COVID.
And even now.
But I said, here's what also I learned. You as an investor are not interested in 9% return, are you? Oh, you want the big equity, you want this, oh, by the way, that all comes with a lot of risk.
Yeah. And
everyone's learning what that risk premium really means.
Yeah, for sure. And it's not over, right? Until those there's gonna be a lot of folks that are still struggling for the refis. I'm blessed. I got just refied a duplex, right, for 7 1/8.
Yeah.
No money to the table, right? Cash out, just a rate and term refi. So I'm pretty happy about that. So to see that in the marketplace is pretty uplifting. When 3 months ago it was pretty much 9%, 8 3/4. So
the COVID public health declaration officially ended in May of 23.
May of 23.
Yeah, that's when they finally said it's the end of the deal, and that's probably from a funding standpoint. They had to officially end it. Then they had all those COVID funds. What do we do with all that? So May 11, 2023, and I said it will be 2 to 3 years after the end of this. Then we'll figure out. So it's 25 or 26 is when we'll get back to normal, minimum.
Where'd all those COVID millionaires go?
I don't know. A lot of those guys disappeared on the marketplace, and
hopefully for the better,
cryptocurrency, all that. I hope so.
Off to Puerto Rico, and
they're
in the water right now. Have joined a Mai Tai.
That's right.
Yeah,
kind of doubt it, but well, a lot of folks don't understand is if you make your money fast, you can lose it just as fast.
Well, that's what most people.
Yeah.
What's the famous line? They confused leverage for genius.
Yes. Yeah. Well, look at what they're doing to what's the guy's name? CZ. Look what they're doing to the Binance
guy. He's done.
If you guys have not followed this,
oh my goodness,
Binance was the largest crypto exchange. They got involved with FTX. So CZ to step down, they're going to pay a $4.3 billion fine.
He's personally paying a $50 million fine.
Yeah, they are. I don't know what that is going to mean for the future of Binance. I can't imagine they're worth anywhere near that. So I don't know what this means, but for them as a company. But I've told everybody, I said the crypto market is designed to do really nasty things.
Yep.
It's kind of like if you're going to be a true libertarian, you have to embrace some really radical ideas that society doesn't necessarily believe in. And so here's a great example of this thing.
They're only libertarians on the upside.
Well, right.
As soon as it goes on the downside,
everyone starts
looking for a safety.
Well, everybody starts screaming for daddy to come in and help. So here's a great example. So he pled guilty to violating U.S. anti-money laundering requirements, meaning since they're a marketplace, they've got to ensure that those dollars are actually being used in a way that they're properly being used. They were able. So part of this program, the CFTC, was to prevent and detect terrorist financing and money laundering, which we know cryptocurrency absolutely does that.
Right.
It's one of the features, right?
Mm-hmm.
Our joke for the longest time is it's like that's how you buy slaves and drugs. Like it's through crypto, right?
Yeah.
Because it's not able to be tracked. And so, the Federal Trade Commission came in and said, all right, boys, we're done. So how big a fine do you want to write? Or how big a check do you want to write? And they nailed him $4.3 billion just to keep him out of jail.
Yeah.
Like, so this whole Jason, cryptocurrency going to take over the world. No, it's not. It's all going to be highly regulated, just like US dollar. Like, there's just too much at risk. This is the system right here.
Yes.
It's not the swamp. This is the system, because all those folks that are involved in finance, they got to get their piece too.
Absolutely. Everyone's going to get their beak wet, right?
Yeah, that's right.
Godfather reference.
That's right. How do I get it? How do I get into this? How do I get my fingers in this? So
where is Bitcoin today?
Oh, I don't know. Let me pull up. I usually follow. Let's see here. We are at 36,000. Dropped 1.5 points today, but it should be up. Yeah, it's up last 6 months, up 38%. But they were coming from a pretty big bottom. So
year over year?
They're up 130%. I mean, but here's the problem, man. It's such a wild ride. Yeah. You gotta remember, it peaked back in November of 2020 at 64,000. So it's still down by half, right? It's absolutely bonkers. So anyway.
Well, the problem is the guys who know what they're doing know what they're doing.
Guys who know what they're doing are already out.
Right? They've already made their money. The people that are wishing a dream.
Well, and I told everybody, we called that last downturn, and I said, look, guys, when you can start shorting these cryptocurrencies, that's when you're going to see some real levity brought into the marketplace. It's exactly what happened. They're now doing, they've got a deal with Ethereum right now. Goldman's involved. I've just read an article or two about it, but that's going to change how Ethereum works. So, like I said, I'm not a big Bitcoin guy. I think if you were, I mean,
right,
look at
and like you said, all that maturity just means that bigger institutes are now changing the model to make sure they can make money.
Well, right. And if there's one thing these large institutions don't like, is being on the downside of a really volatile asset.
Right. No way.
So they're going to make damn sure that they aren't. I mean, look at this. It's compared to November 21, it's pretty flat. Like it's a relatively flat.
2 years, we still haven't recovered.
Yeah. In 2 years, you still haven't recovered in Bitcoin. And in the last year, it's gone up a ton, but it's a lot less volatile than it was 2 or 3 years ago. But anyways, it's not a currency. It's just a speculative asset. It really just isn't. What is funny is when you hear from the Bit Bros and they're like, no, you understand. It's going back up because of inflation. I'm like, well,
no, the new fund.
Yeah. It's like
fund's going to send it up. Yeah.
Well, you got to think it peaked in May of 2021, dropped, then jumped back up in November of 21. And then it's just collapsed since then. And it's slowly coming back up. But again, it's just so volatile. It's just not something. I don't know. I don't know how you invest in something like this and sleep at night. I think it's a lot of talk, but shoot, man, they just smoked this guy at Binance. Like, you really think this thing has the value you think it does? So now, if you've lost the utility of anonymity, being able to trade this thing however you like to trade it, once you've lost that, then what's the real utility of Bitcoin? It's not liquid. It's a pain in the ass to trade. So, in any case, like I said, I don't get it. I've called it since the beginning. I'm not a big fan of it. The technology is very cool. We could use blockchain in real estate all day long, but in any case, we'll see what happens from here on out. But it's going to be interesting.
So inflation's down, rates are coming down. We're still having a really hard time finding crews. That's still a problem.
Well, it's the holidays.
Yeah. Well, my God. Yeah. So by December 15th, that by the 1 week that they're supposed to be gone turns into 1 month.
Yeah. Your crews disappeared December 15th and they come back right after, like,
oh yeah, late January 15th,
January. What was that? MLK.
Well, they go down there and have a lot of cash in their pocket. They come back as soon as their cash runs out, right?
Yeah.
They come back. So we'll be seeing some of that. But I do think we're turning a bit of a corner here. So we'll keep an eye on it. I said last night to the Mastermind folks that I think there's an outside chance by the end of the year, first week of January, we're going to see mortgage rates, FHA rates, regular 30-year financing, in the high sixes, which I think will really sort of prime the pump for a pretty good buying season in the summer.
Mm-hmm.
So, all All right, guys, thanks for watching us. Make sure you go to MRTXREI. Come out to our next 2-day event. We're going to be talking about real estate investing and legacy wealth building. This is really, really important. We'll see you then. Thanks.